This is a trade we're in. We're in a call debit spread in Deer. We're along 345, short 355. This is a 10-point wide call debit spread. We put this trade on 5 days ago. The underlying has moved about 0.7 standard deviations to the upside, and implied volatility has actually increased slightly. I'm not sure if we have earnings coming up sometime soon in Deer. Does not look like. Looks like earnings are coming up in 31 days. So this trade has 25 days until expiration. So we should be technically out before earnings. But in any event, right now we are seeing an unrealized gain of about 30% in the last 5 days. This is not a home run, but it's definitely a trade that is worth considering managing. This helps in one of several ways. Number one, helps with building financial capital, right? You make 30% here, 30% there. Over time, it will all add up. Number two, it helps replenish some of the mental capital. If you've gone through a stretch where you had a bunch of losses, you may feel a little discouraged. You can't seem to get a hold of things. This is one of those things that you should consider doing, taking small wins here and there, and over time this will help you rebuild the confidence that you need to continue to find and execute on good trading ideas. So with that being said, a couple of things I am considering. One, the simplest thing to do is to take this trade off. This would be a sell to close. It's currently going for about $5.60, maybe $5.70 from $4.40 entry. Another thing to consider is to sell a 5-point wide call credit spread. So selling a 355, buying a 360. This will turn into a broken wing call butterfly. This adjustment is currently going for about $2.10. So the 210 will go towards reducing risk from 440 down to about 230, maybe 225. We have less risk on the downside, but we are giving up some of the potential upside north of 360. This will keep you in this trade. Our delta will go from plus 16 to plus 8. So we remove about half of directional exposure or risk, if you will. And obviously, we're giving up some of the potential upside. But it will keep you in this trade and with a bullish bias. If you wanted to kind of lock in the profit and remove more risk in this trade, we can look to sell a 355, 365. So that's a 10-point wide call credit spread. This would make it a balanced call butterfly, right? We have a 10-point wing on the downside and a 10-point wing on the upside. The body of this trade would be a 355. This adjustment is going for about 395. So this 395 will go towards reducing our risk from 440 down to about only 45 cents, which means that if the underlying is above 365 at expiration or below 345 at expiration, there's only about $45 to $50 worth of risk in this trade. The best case scenario is that the underlying is somewhere around 355 over the next 25 days. That's where this trade has a potential of making upwards of about 900 and let's call it between $900 and $950. Right. So those are some of the adjustments that one may consider making. Or the fourth adjustment is do nothing and just kind of sit and wait. Obviously, we would need the underlying above 355 at expiration. So if you're very bullish, you continue to hold. If this trade, or if the underlying is above 355 at expiration, this trade has the potential of making upwards of $550, while remaining risk in this trade will be 440, which was the original debit that was paid to put this trade on.